Welcome to Lausanne to our coverage of the FT Global Commodities Summit. With me now is Yusuf Alizera, the Chief Executive of Noble Group, the trading house located in Hong Kong. Mr. Alizera, thank you for being with us.
Thank you, Jeff.
We have here news this week of China economic growth slowing down to 7.7%. Are you worried about this development in China? And how do you see in general the Chinese economy that is key for the commodity markets?
I think the key in China is not where the growth is 7% or 8% or 9%, it's the quality of growth. And I think what you're seeing from the policymakers is a realization that growth for growth's sake is not a policy goal. And they're very focused on the quality of growth. Historically, what you've seen is overcapacity in many industries. And I think the Chinese policymakers are focused on changing that and addressing the concerns that come out of that.
The commodities industry, the commodity trading industry has been very profitable over the last 10 years, in part thanks to the big super cycle that it was unleashed by the industrialization of China. How do you see the profitability of the industry for the next 10 years?
I think you have to break down profitability between the profitability driven by asset growth and the rise in asset prices, and the profitability that comes from our traditional business, which is the margin of moving product from low-cost locations to high-demand locations. In fact, when you look at the commodity business, the bull market in commodity prices was not necessarily a bull market in margins of commodity traders, of moving product, because you had more and more players come into the market. I think as the asset environment or the price environment becomes more challenging, that may ironically improve the margins in some of our business. So you think the
next 10 years could be better for you because margins could recover?
I think in our traditional businesses, and maybe in firms that are very asset-heavy firms that have benefited from a significant rise in commodity prices, it may be more challenging. But for firms that focus on doing what we do, which is merchants and moving product, and addressing supply bottlenecks and managing the supply chain, I think margins may actually improve.
Mr. Alizera, you were formerly a senior banker with Goldman Sachs, and you are coming now to a business that is trading commodities, merchandising. It is a millennia-old business. How has been that difference? How do you find the Wall Street financing and now this business of moving commodities across the world?
It's been a very, very exciting transition for me. After spending 20 years on the financial side of the business, it's very exciting to work with the real physical businesses. And the good thing about Noble and my responsibilities at Noble is there is a balance between the financial world and the macro and risk management and the physical world. So I think that balance is actually a very exciting aspect of my new role.
A lot of traders executives believe that trading companies will remain private, that it's better to do it in an environment where there is a partnership. However, Noble Group has been listed for many, many years and it has been successful. How is your view? What is the challenges of operating in the public market?
Listen, in banking, there was always this debate around mark-to-market or non-mark-to-market. And whether you should manage your business in a mark-to-market environment or a non-mark-to-market environment. Now, in many ways, mark-to-market is more difficult than non-mark-to-market, but it doesn't mean that it's the wrong way to manage your business. So clearly, managing businesses that you have to make very long-term decisions in terms of your investment horizon, in terms of the decisions you make on assets you build, are sometimes difficult when you have to report results on a quarterly basis. Just because it's difficult doesn't mean it's the wrong way to manage your business. I think the discipline, transparency, risk management discipline that comes from being a public company is the right way to manage your business. I also think going forward, having access to the capital markets, being able to fund yourself in the capital markets as well as being able to fund yourself with banks is going to be a competitive advantage. Transparency is going to be more and more important, whether you're public or you're private. So in fact, I think many of the things that we've had to do over the last 15 years as a public company and the challenges we've had to address, even private firms will have to do more and more of.
Yusuf Alizera of Noble Group, thank you very much.
My pleasure. Thank you, Javier.